Everyone, it's Stephen here from Share Navigator, and I just wanted to give you a technical update on the S&P 500. Look at some of the correlations that are going on, and I suppose to explain really why we haven't placed our short put trade for April just yet. So first things first, let's look at the S&P 500. You can see a nice candle yesterday. So this is one day of trading yesterday. You can see it was up 1% yesterday, which was quite interesting because actually, if we come into the futures chart here, and if I bring you into, let's say, a 30-minute chart, for example, you can see at one stage at the open on Sunday, so that would have been around here, you can see that that was more than a 1% drop in the futures, and then it just steadily climbed throughout the day. So this is all yesterday's trading and then into today here. So if we actually correlate that then with oil, you can see the opposite was true with oil. Oil spiked here, and then throughout the day it started to fall down. So the cause for this was the news that was breaking that the talks between the US and Iran had collapsed. Obviously fears for the ceasefire to end. And then, of course, we had the news that the US were going to block the Strait of Hormuz for any ships coming in and out of Iranian ports. And that's what caused the initial spike in oil and then the initial fall in the S&P 500 futures. But then news started to filter out. If you actually look closely, you can see where it started to go positive. That's when news was filtering out that there might be talks coming in the near future again. So that the market turned around, and then we had a number of brokers actually come out as well with earnings and start talking about earnings increases, actually expectations, which is incredible given the inflationary pressures that we're likely to feel going forward as a result of higher oil prices. So moving back to our daily chart, so we're zooming the time frame back out again. I just want to highlight some of the positives. So, we said all along this downtrend had to end, and when it ended, happy days. This is when we spoke about this area here, and then we got to jump above the 200-day moving average. Now, I just want to remind you what was going on back then and why we didn't pull the trigger here. Part of our rules is we don't play short puts when the S&P is below that 200-day moving average. So that's part of the system that stops us from getting involved in trades that can potentially harm your portfolio going forward. So that's one of the rules. So then we got this big gap up here. And the reason for that, of course, was the news that the Iranians wanted to talk, and there was a big jump up. And since then, the market has kind of made new highs since then. Now, normally what tends to happen there is when this happens, there usually is a bit of this gain given back. Hasn't happened yet. It doesn't mean to say that it won't happen, but we just need to give you the history. So even though hindsight's a wonderful thing, if we'd have put a trade on there, we would have won it. We can all say that. But don't forget what was going on. Oil prices were still elevated. They were up at $110 a barrel at this stage. Significant inflationary pressures. We know all across the world there's fuel shortages. There's strikes going on. There's all types of stuff going on as a result of this war. So the prudent thing was to stay out of the market. So now where we are, we have to establish, well, what's the next line. So one real positive on the market, I suppose, is yesterday's trading actually broke above another key resistance. So if I was just to draw the tops here, for example, it's slightly downtrending, but you can see we've peaked outside of that as well. So that's actually bullish for the market. So there's a chance here actually that we're going to retest the highs soon. And again, this is all going to be news dependent, I think. So it looks like the market wants to make its way up to those all-time highs, but we're not prepared to trade that just yet. We're going to wait and see. Don't forget, 3 times it's failed to break through. So we still think the likely scenario is that at some stage we're still going to have some volatility, and we're possibly going to fall back down towards this 200-day moving average or even the 50-day moving average again. And that's when we get our trade on. So when that happens is anyone's guess. So one of two things is going to happen now. We're either going to bust through this ceiling up here, this resistance area here. So we're either going to test it and bust through it, or it's going to fail and get rejected again. And in that situation, then you could see the market sell off and possibly even come down and revisit these lows again. So that's why we're saying, remain patient here. There's no rush. if we don't get our trade on in April and everything settles down and there's a truce, etc., like that, we will just look to our May trade, and that's what keeps you in the game for longer. So just a couple of other things just to keep you aware where actually there's a census in the market where things are a little bit better off. If you look at the 10-year yield, for example, that started to fall. That's a positive for stocks here. The reason for that is the yields were spiraling out of control. This would have been a real worry for the US here. The reason for that is higher interest rates have massive knock-on impacts across stocks, right? So the fact that interest rates are coming down are a good thing. So that's positive for stocks. And then if you actually look at the euro dollar, the US dollar is starting to weaken again, which is a sign there actually that the market isn't as concerned about the conflict in Iran as it was when it came right back down here to 114 at one stage. So certainly the fear has dissipated, and you can see that in the VIX as well. VIX is down below 18. It wasn't so long ago here, guys. It was up at 35. That's only about a month ago. And it was kind of hovering between 25 and 30 for quite some time. So that's all come in. So we're just going to wait. We're going to bide our time. Because the market has made such a move here now, we're approaching the resistance point. We might as well wait and see does that resistance get tested and see does it hold. And if it gets rejected, then we might get our opportunity yet for April. It's unlikely at this stage, but we might do. And if not, we'll just turn our attention then to May. But I wanted to give you a highlight of all the kind of moving forces. You got to keep an eye on oil prices. They're down. At the moment, the market is up slightly for today. It's not up much. Interest rates and the US dollar are showing calmness, which is good. And we've broke a little bit of a resistance point for the S&P, which tells me we might retest those highs. But I still expect a revisit, or at least to close some of the gap down to that 200-day moving average again. And if we do that, I think then we get our trade on. Okay, this is Stephen with an update. If you have any questions, please WhatsApp me. Thanks and bye for now.